Joint MD Prabhudas Lilladher joins me now. Amisha, great to have you on the show. Thank you so much. I'm going to start by asking you, there was so much of misgivings with which we went into the FOMC meet, and now we're talking about whether the Nifty is going to face resistance at 80.50. What sense are you getting from the dealing room today?
So I think there is good amount of short covering. There is no doubt about it. As also there is genuine buying also. It's both actions are happening. And the fact is that after having crossed the uncertainty for the time being from FOMC, we are looking at the positive news from RBI, and which is what market is very enthused with. But if you see over next one and a half month, apart from the RBI action in this month, come October, we will be staring at results, corporate numbers, as also Bihar elections. So on a broader basis, if you see, I would think that apart from this rally gaining a bit more ground, we are still in a moderately steady to bullish mode. It's not a complete, the way market is showing exuberant today, it appears that this could be a little too aggressive exuberant.
Also, the rupee has also rebounded considerably. It's back above the 66, towards the 65 level, as you can see, 65.78. Amisha, the general sense is that, the biggest pressure on the market has been the FII selling really, because of this global concern. And we've heard of a lot of basket selling, etc. Do you see that subsiding in the immediate term? And could that prop up the markets? Because domestic institutions have been buyers, irrespective of what the news flow has been.
Absolutely. One is that domestic has, even during these last 15 to 20 days of extreme turmoil, have been receiving one of the highest ever inflows. So as what I understand, on the day when markets fell some 1,500 points on Sensex, there was a net inflow of 2,000 crores across mutual funds. So yes, domestic inflows are continuing. Coming to FIIs, I think apart from the fact that the currencies in emerging markets were weakening, which led them, and particularly some of the ETFs on hedge funds were led to book some money out of emerging markets, and there can be a bit of bounce back. But if you see a global overall pictures for emerging markets, India is already at 37% premium to the MSCI emerging market valuations, and typically in history we used to be between 24-25%. So once we are still expecting some of the larger emerging market economies to continue to fare not so great, not attract any major inflows, and if inflows continue in India, then we are looking at premiums which we have never heard of. So I do agree that yes, the outflows will stop, that itself should be pretty positive. Small inflows will start, but I'm not very optimistic that the huge inflows will start only dedicated to India.
That's a very good point that you make, Amisha, because that puts it in perspective. The fact is that India has emerged better off than the rest, and how much more inflows can it get? Bear for the economy, the power sector, the NPAs out there, stuck projects, and all leads back to the state of the distribution companies and how badly the SEBs are managed. When you hear the government talk like this and actually give specifics on, especially on moving the debt from the SEBs to the state governments, part of that entire deregulation or federal structure that the government is talking about, what do you see as an investor?
So I think, if I'm not mistaken, in the earlier regime itself, so power discoms particularly might be going through second round of restructuring. So if we remember, about 3 years back, the situation was extremely acute, including Tamil Nadu, Rajasthan, and so many states increased tariffs. Not only that, then the over-pervasive act came, whereby these debts were to be part of the state deficit. So, and the banks, because of that, restructured. So I think we are facing a similar situation now, because the implementation would not have been as strict. So I would like to, of course, see how the things are being implemented this time round. If implemented truly, it will be very important to revive the health of not only banks and their NPAs, but if you know, there are the highest number of days of stock of coal with all the power companies at the moment. And Coal India, which has increased their ability to produce more, have to go slow just because there is not enough consumption by power utilities. And that's because across private and public power utilities, the demand from SEBs is so choked because of their own finances that there is a power deficit on one hand, but at the same time, we are not able to utilize the available power capacity. So I think to come out of this mess is very, very critical, but it will not depend on, I believe, policy measures, but rather implementation, because all the act and policies were being done just about 2.5, 3 years back.
Absolutely, Amisha. It's going to be about implementation and action on the ground. I'm going to ask you one last question on the banking space. It's been a stellar performer. In fact, the index BankX is up very sharply. It's up over 3% today, led by Axis, ICICI Bank. There were reports that the government is mulling 100% FDI. When the news on that whole caps on FDI, FI and how it should be read had first come out, we saw a substantial rally in private sector banks, Amisha. I know you like this space. What are you making of this news and how much more upside do you see here?
I think for the rally today is for both the reasons. Small part of it is because of this 100% limit for FDI, but I think a larger part is because now we are heading towards a rate cut, or maybe a rate cut cycle as the market perceives, because there is a room between whatever wholesale price inflation and the current rates are. So maybe over next 3 to 4 quarters, there could be a rate cycle, downward rate cycle that we can see, and which is where some of these banks with their large government security portfolio should benefit, offset their NPA and other issues. But coming back to your question about the FDI limit, I think the biggest beneficiary should be, apart from these two banks which are doing well, HDFC Bank, because they have been constrained by this FI buying because of the parent holding also. They have been doing extremely well throughout this cycle and are expected to force to be on the move to garner the additional growth in the economy, as also because their base rate itself is the most competitive. So for this particular development which you are talking about, I think HDFC Bank should have been the biggest beneficiary. Of course, for the sector, it will be very positive.
Right, Amisha. Always great talking to you. Thank you so much for joining us today. That's Amisha Vora from Prabhudas Lilladher with her take on the market and how she's reading the signs up. But there's one